It's 3 years since the Bank of England base rate was cut to a low of 0.5% to ease the pressure on families, although mortgages of £100,000 will now cost £25 a month more. Basically, if you work on the fact that if you've got a £100,000 mortgage, it is going to be £25 a month increase, which, of course, that is a big figure, and that's a low figure for borrowing by today's standards. So imagine what it's like if you've got a £200,000 mortgage. Joining me is Simon Rose from Save Our Savers. A group are calling for better deals for savers. Simon, good afternoon to you.
Good afternoon.
Presumably that you actually would quite welcome this, wouldn't you?
Well, I think, as your previous guest explained, we have absolutely no growth in the economy, essentially, because interest rates have been at rock bottom for 3 years. And certainly if you're looking at it from a saver's perspective, there's been a massive transfer of money from savers to borrowers because the Bank of England has not kept inflation under control. So it's actually cost money to hold on to your savings. I mean, you know, we all see the effect of inflation. We all feel poorer as a result. And I'm afraid, you know, it's all because the Bank of England's kept base rate at 0.5%.
But we can't have it both ways, can we? You know, we can't be moaning one minute that we've got no interest on our savings, but also loving the low mortgages. So where is your stand on that? Presumably,
our stand is that essentially interest rates should go to the level that they ought to be at, and it's certainly not 0.5% for the base rate. What's actually happened is that about £100 billion has been transferred from savers to borrowers who have benefited over the last 3 years. Excuse me, I'm still talking. It is impoverished savers and pensioners who are feeling incredibly disenfranchised and angry. And if interest rates begin to go up, that would at least help to get us out of this appalling mess that we're in.
Well, a lot of people will be right behind you who are savers there, absolutely. So we have to put up mortgage rates to be able to help that, do we?
Yes, at the moment what's happening is that the economy is malfunctioning completely. The banks are too afraid to lend. They ultimately would want rates to be higher so they can have bigger margins. There's certainly all their mortgages going up. There's no indication yet that savings rates are going to go up. We hope they will. The whole economy has been distorted. And it's not people who are benefiting from this, and some mortgage holders, admittedly, have been a little better off in the last few years. But what's essentially happening is that the government is getting its debt very cheaply. The banks are hanging on to our money and not lending it. The whole economy has been skewed and distorted because the government is petrified of mortgage rates going up. And while that may in the short term be helpful to some people with mortgages, it won't be helpful when they retire. Their pension fund is being decimated by what has happened. So there may be a benefit now, but there isn't a benefit down the road. All the pension funds have had terrible trouble because they cannot find a way of investing. They invest in government stocks, which are yielding next to nothing. And companies which might be investing in the economy are having to prop up their pension funds instead. So as you say, yes, some people will benefit, some people will lose out. But ultimately, I think when we come to look back at what has happened in the last 3 years, we will realise it was a gross mistake. The country as a whole, if you take in government and you take in householders and the financial sector and businesses, we owe 5 times what we earn in a year. And having interest rates at a low level just means we are never going to get out of this mess. I mean, imagine your own salary just in your head and then think you owe 5 times that, and that every single penny you earn is going to have to try and pay it off. Well, does that seem a bit of a mess? Yes, it's worse than the situation in Greece, but the government has seemed doing nothing to try and put it right.
If you were, you talk very well on this subject. If you were Prime Minister, what would you change as far as rates are concerned for people who are lucky enough to have savings? Because we're talking about the lucky ones here, aren't we?
Well, you say lucky, but I mean, some people may actually be well off, but I mean, we're talking about people who have scrimped and saved their entire life, who have gone without, who have not accepted cheap mortgages, which they couldn't afford, who have not decided just to go for a holiday there and then, but they want to put money by. Perhaps they want to put it by for their children. Perhaps they want to pay for their care costs in their old age. Perhaps they want to have a pension. This is not what we call luck. This is what people should be doing. And instead, savers are penalised.
But they
you look at the success of countries like China and India, the reason is they save and we don't.
Yes, it's interesting, isn't it? Because those people who've got savings at the moment, who are not getting, which is who you're speaking on behalf of, who are not getting interest rates, at least they're lucky enough to have some savings, aren't they?
You could argue that, but we have so many members who are old, who've either may have retired, they're now trying to live on their savings. The value of them is going down the whole time.
Yeah.
I wouldn't consider that really to be lucky.
No.
They're feeling desperate. Many of them are saying we've done the right thing. We've always been told we should save. And what happens? We actually do save, and at the end our money is just sort of taken from us. It's worth less and less all the time. So a lot of them are in despair and saying, I think I'll just go out and spend all my money and let the state look after me. It's a ticking time bomb that is going to explode sooner or later.
Just finally, Simon, because, as I say, you talk very well on this, for those people who are listening who've got a bit of savings at the moment and it's sitting in a bank account or building society, say it's 10, 15, 20,000, what is the best thing that they can do with that money at the moment, assuming that all things like ISAs and everything are done?
Well, all you can do is look for the highest rate, but there are a very few accounts that will pay you more than the rate of inflation, but then, of course, you pay tax on your savings interest anyway. Savers just have to hope that the awful situation we've been in for the last 3 years will get a little better. And I think we'll find that although mortgage holders will squeal as the rate goes up, interest rates will need to go up. They can't go down from this level. And as long as it happens gradually, we may be able to get out of this mess. The worst thing would be if confidence suddenly collapses in the pound, and then interest rates will have to be jacked up and we'll all be miserable.
Very interesting to talk to you. Simon, thank you very much indeed for coming on today. Most grateful to you.
Thank you.
There we are. That's Simon Rose from Save Our Savers. That's a group calling for fairer deals for savers.